In this video, we are going to be analysing T-Mobile, ticker TMUS. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, firstly, why are we down nearly 10% on the day so far? So what this is mainly to do with is Dish Network Corp and an Amazon partnership. However, what has already come out is an Amazon spokesman has already said it doesn't, well, they're always exploring adding benefits to Prime members, but again, the wireless plans is not part of what they're planning to do. So this, I do think, definitely could be an overreaction. You're seeing it on T-Mobile, you're seeing it on AT&T, all of the basically big phone companies, you're seeing a massive decline in, most likely going to be an overreaction. And again, we're down 10% on the day, so what are key levels I'm paying attention to? So now, what is really key with this is, as you always see, if you've been watching these videos before, we always talk about basically this third deviation. If stocks come down to here, really it's a very high probability that this is where you start to bounce, and if you do trade outside of this area, it tends to be very short-lived. So in this case, T-Mobile were at 125, 120, well, 130 to around 129. That is where our third deviation is between this 6 month and the 1 year. So whenever we have got below this level, again, this is really expected to be short-lived. Most likely we're going to bounce, we're going to come back to trade at least back above 130. So that's really what we're watching for. And considering that, I do want to put out kind of a disclaimer, is I am probably going to be trading this, probably looking to trade it through vertical spreads, just so then if it doesn't bounce within the next few days, you know, we can put about a month on the expiration, and we can usually get about 1-to-1 risk to reward on that. So again, we're at around 125. We're about to hit into our fourth deviation. We can see that's at $124.70. That's a 6 month level. The 1 year level is at $123.32. So again, this range is going to be key. If we can come into here, this is usually when I like to get that long entry. So again, I do have vertical spread orders out. They will most likely execute once we hit into this range, or if we hit into this range. So that's my main focus from a support side. Again, mainly looking for that bounce. First target's going to be our third deviation. This is where I always lock in a tiny bit of profit, or at least move the stops to break even in the sense of the vertical spreads. Again, I'll just move my stop to break even because you'll be up on the vertical spread coming into this level. And then again, obviously, if we continue up, then we'll talk about the resistances, which is going to be around 135. Now this level I really like. It's our second deviation on the 6 month, but also our second deviation on the 1 year. The levels are very close. I mean, you can see it here and here, the levels are very close, but the second are basically bang on each other. Going to mean it's a really strong level. So again, if we're holding it long bias into this level, really want to be locking in profits coming into this range, or again, at least moving stops to break even if you haven't already, or maybe have a trading stop. But on this level, the reason I lock in profits is there is a high probability we start to pull back. Doesn't mean we continue lower, just means we expect at least a temporary pullback. Sometimes it will continue to go lower. That's why we lock in some profits. But in the case it's just a pullback, and then we continue up, we still want some size in the trade to take us to that next level, which in this case is going to be 140 to around 140.75. And again, this will basically be my final zone of resistance. Again, if I'm holding this range long, that will basically be my final target. Again, considering the vertical spreads, they'll probably be up 90-95% by the time we're kind of in this range anyway. So to me, I would probably already be out the trade. But again, maybe if you're holding the shares or you're holding calls, there's definitely reason to be staying in, or at least staying in with some size to come into these further off targets. Now, what would be the key levels past here? So again, these would be the resistances. Right now I'm long bias. I'd be looking at these as targets on the way up. Now, once we go past that 140, then the main problem is we come into statistical mean. So that's going to be between 145, 146.50. Now, this is considered fair value on a stock. So basically, if I'm trading this from a trading perspective, I don't want to be holding or entering into a stock at this level. The only way I use this level is, again, if I'm long bias coming into this level, that would be my absolute final target. Whether I'm holding calls, shares, does not really matter. I will be closing out my position once we hit into this range here. Now, if we start to break it, this is where I turn a bit more short bias. So 150 to 152. Now, yes, I would be more short bias here, but at the same time, considering we're so close to that statistical mean, not something I'd probably look to trade. Where the stock always becomes more appealing, short buyers will be coming into this second and third deviations. So in this case, the 155 to the 158. But really the main focus as of right now, obviously we're down at 125. That's going to be my main focus. I don't think there's too much point talking about these upper levels because we're not really anywhere near them. So again, the main focus is, can we bounce out of this 125 range and start pushing back above that third deviation? Again, that's how I'm going to play it. Final disclaimer, I will be most likely trading this myself, going through the trade plan of vertical spreads. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.